Silver is not just rallying, it is warning that the financial plumbing is changing. Subscribe for market updates. For years, people treated silver like a noisy side market. It spikes, crashes, frustrates everyone, then disappears from the headlines. But now the setup is different. The story is not only about one chart, one candle, or one bold triple-digit call. It is about settlement rails, reserve assets, physical demand, and trust. Countries are building alternatives to the old Western banking system. Project mBridge showed that cross-border settlement can move outside traditional rails, and Saudi Arabia joined that system in 2024. That does not prove oil is being swapped for silver every day. It proves something more important. Major countries want options. And when countries want backup rails, they are usually worried about the main road. Central banks are also buying gold because gold carries no direct counterparty risk. After Russian reserves were frozen in 2022, every central bank learned a lesson. A reserve asset can be liquid, accepted, and still politically vulnerable. That is why gold buying matters. And that is why silver matters even more for investors. Gold is mostly monetary. Silver is monetary and industrial. It connects to solar, electronics, energy systems, investment demand, and physical supply. So if investors want protection while industry needs ounces, silver can move violently. Paper markets can smash price fast. Futures, margin pressure, and algorithms can force sharp drops. But paper cannot create physical ounces. That is the key. After a sell-off, watch what physical buyers do. If demand disappears, the drop was real weakness. If imports rise, ETF demand grows, premiums widen, and inventories tighten, the screen price may be sending the wrong signal. India is already important. Silver ETFs launched there in 2022, and inflows grew quickly. In 2026, India also moved to restrict some silver imports after strong bullion demand. China is harder to read, but imports, exchange flows, premiums, and industrial demand give clues. This is why triple-digit silver is not a promise. It is a stress test. If debt pressure rises, reserve trust weakens, physical demand stays firm, and available supply tightens, silver does not need fantasy to move higher. It needs pressure and time. But the path will not be smooth. Silver punishes certainty. It can shake out bulls, trap bears, and reverse when emotions peak. That is why the next move matters so much for ordinary investors watching now. The real story is simple. Gold is already returning to the center of reserve thinking. Silver may be the next metal to feel that pressure through industry, investment, and physical scarcity.